Hi there, I'm Patrick Belton of Q Insurance. I have conducted a marketplace study of the Canadian residential condominium marketplace. So it's for a product that we'd create called Q Condo. So this marketplace research is to set the table for developing our own insurance policy product and rate table. This would be a product exclusively for online distribution and sale, so an instant quote, bind, and issue process for the consumer. There are a number of key highlights that grab one's attention when looking at the condo insurance market for personal lines. The first would be geography. Insurance problems with condos is particular to specific areas of Canada. A second item would be concerns renters. Condos that are rented to third-party tenants do experience worse claims ratios. Number 3, profit. Without a doubt, our constructed condo product, along with the risk management program that we design, it can be profitable for underwriters. Number 4, a key is differentiating the rates, and technology has a role in this. But what this really means is we want to charge higher rates for renters of condos, for taller towers, for towers with higher tenant turnover rates, for towers with higher vacancy rates, for towers with unsatisfactory repair and maintenance records, and for units with no smart home device, and for units with no water leak detection sensors. A fifth key is definitely technology. This plays a fundamental role in ensuring profitability. A few items would include things such as water leak sensors, detectors, especially ones with the automatic shutdown mechanism for turning off the water supply. But two other things involve inspections that we want the consumer to utilize. And these are both digital apps. One of them is called GOCANVAS, and all GOCANVAS does is it replaces a traditional paper application like you'd see in 1980 that an inspector would use with a checklist, but it digitizes it on your smartphone, and it only takes a few minutes to do. The second thing would be Google Cloud Vision Artificial Intelligence app, which is a cloud service which allows the smartphone, again, it's an app you download to your smartphone, the consumer does. As they walk through the premises, the video camera on the phone is filming everything, labeling and detecting every object in the premises. And there's obviously a bunch of benefits for that. But we'll discuss the GoCanvas and the Google AI benefits a little bit later in this presentation. There are 4 connected arenas. Consideration of the insurance marketplace and product development pertaining to insurance for residential condominium owner-occupants cannot be done without examination of adjacent arenas, which include renters insurance, condo corporation insurance, and commercial realty insurance. The 4 arenas all conflate and impact the other. There are challenge issues. The condo insurance market is challenged in many parts of the country due to a number of factors, which include poorly constructed structures, too many tall towers, unsustainably low rates, overreacting carriers, escalating claims activity in the most recent 5-year period, vacancy rates in many buildings, foreign ownership of units, ethnocultural living practices, and poor governance of condo corporation associations and boards. It's a troubled insurance marketplace, and that is extending harm to other areas of Canadian society. In certain regions of the country, the condo insurance market has become so troubled that it has been the direct cause of personal bankruptcies, foreclosures, along with the inability to insure a property or resulting in underinsured properties. This has led to reactions which include advocates for government regulation of the condo insurance market, caps on condo fees, and caps on what can be charged to rent a condo, and even caps on what can be charged for condo insurance. Poor public relations, once again, are plaguing the industry. The insurance industry, consistent with its historical tendencies, has been very slow on the uptake and pursued a flawed, or at times non-existent, consumer public relations strategy with regard to condominium insurance. Insurance associations and representative bodies have been very slow to act. The brokerage channel has been lazy, as is normal for that sector, and failed to properly explain to consumers the causes of the troubled condo insurance market, and done too little to assist consumers facing insurance distress. The condo insurance market is another historical black eye for the insurance industry. Now I'd like to discuss with you briefly just some things surrounding the state of the condo insurance marketplace. And there's a lot of key things to hone in on. First of all would be insurance carriers overreacting. They're punishing consumers and condo corporations with things such as massive deductible increases, sometimes in the hundreds of thousands of dollars on renewal. B would be massive premium increases. Sometimes these are in the tens of thousands of dollars and even hundreds of thousands of dollars on renewal. C would be significantly reduced coverage limits being offered by carriers on renewal. Examples that I found were $65 million limit on a condo corp building policy, and suddenly at renewal it's only $10 million, and in the market they can't make up the gap. And this is affecting the personal lines condo market in those units, in those buildings, obviously. D would be carriers completely withdrawing from the market for insurance involving condominium corporations. In other cases, it's just carriers withdrawing specific coverages on renewal, or even reducing the coverage form, say from an all risks to a named perils. This type of situation, though, is having the effect of causing individual condo unit owners to foreclose and walk away from their condominium home. Some individual condo unit renters have had to walk away from their condo as well. In both situations, individuals have had to declare personal bankruptcy after condo insurance increases and condo fee increases were so excessively high, or because the renewal coverage was reduced in scope by carriers, which meant that the condo unit insurance consumers were not complying with the terms laid out by their mortgage lender. There have been cases like this where condo insurance has sold their units because of underinsurance. Other cases, it causes personal bankruptcy and just outright walking away from your home. There's cases like this where condo insurance have found this precise situation so extreme that's even occurring in brand new buildings that are a year old. Surrounding this issue is the condominium fees, which have seen in certain instances massive increases to several $1,000s a year. And this means individual condo unit owners cannot afford these fee increases. So they either sell their unit or they foreclose. And these increased condo insurance fees are forcing people across Canada to declare bankruptcy. Bottom line is, some condominium corporations are so grossly underinsured, or they're facing reduced coverages, or reduced coverage limits of insurance upon renewal. And this is causing distress throughout the entire market. A second significant item in the overall state of the condo market is we're seeing individual unit owners who are having to carry the full load of a claim that was made. For example, if a unit owner fills their bathtub but forgets about it while it was filling, and then the tub overflows, and then this causes damage to several condo units below their unit, the result is that the unit owner with the overflowing tub may be held liable for all of the deductibles for the other condo unit owners below them. In such a case, sometimes the condo corporation decides not to file any claim for the water damage to the common elements from this overflow tub. And that means that the condo unit owner who caused the water damage in the first place would be held financially responsible for paying the common area damages. A third key marketplace item concerns the hardest hit condominium buildings facing higher insurance costs. And these tend to be the large, expensive, newer buildings, as well as those with poor maintenance and repair records and obviously poor claims histories. This has led to many insurance carriers re-evaluating currently their condominium underwriting criteria, as well as the risk appetite within the class. What we're seeing is that a fifth item in the marketplace is that liability is being downloaded from the condominium corporation insurance program to that of the individual unit owners. And this needs to concern us in the development of our personal lines program. A sixth general overarching item is that the entire commercial realty insurance space has been under pressure in recent years with claims issues and insurance issues as a result. And this has polluted the condominium corporation insurance space. The commercial realty space has been having problems for a while with poor loss ratios. So with this polluting the waters of the residential high-rise space to a degree, there's this natural spillover effect. So the rates in the commercial space have been too low for too long, unsustainably so, and that is one of the key driver of the poor loss ratios in that class. So as that market's hardening, that's having a spillover effect into the residential condo insurance. So you factor in that these condo insurance rates have been unsustainably low for too many years through intense competition among carriers and an oversupply in the market. But you add into that the worsening claims problems that have arisen, in particular over the last 5 years. And this has compounded the low rates problem. And so it's led to a needed correction in the pricing in the marketplace, but that's fostered a crisis with massive sudden price increases, coverage reductions, deductible increases, or even the total outright withdrawal of certain carriers from the marketplace. And an eighth problem that stands out in the market is actually counterintuitive, and it concerns the fact that condo towers with higher tenancy rates, it sometimes leads to condo boards and associations that are more complacent. For some reason, it leads to laziness with regular maintenance and repairs in the condo building. This is a pattern that we see in the market. A ninth general marketplace area is geographic areas where there's been some form of government-issued state of emergency declaration. Condos in these zones are either being denied insurance or are seeing their rates rise exponentially and or their coverage is being reduced on renewal. A 10th marketplace item concerns the inherent tension in the condo market between assigning responsibility for claims between the individual condo unit owner and that of the condominium corporation. In Ontario, under the existing Condominium Act, the deductible may only be charged back to the unit owner if the damage was caused by that unit owner's act or omission, and only for damage to that owner's unit. Insurers for condominium corps would like to see this changed. The Ontario Condo Act, however, does permit bylaws to be created which make unit owners responsible for these costs in the event the damage is from their unit, irrespective of any act or omission, and for damage to other units and the common elements as well. Thus, we need to examine individual tower acts and regulations so that we know where such damage responsibilities are being assigned, as these have a direct damage in correlation with the claims experience, which directly impacts what rate we would want to charge for that particular building. By extension, we need to be aware of this discussion taking place, that the condominium corporations can approach their corporation claims issues with a form of chargeback to the individual unit owners. If or when this is done, it should only be carried out in such a way as to apply to insurable events such as floods or fires, and the chargeback should be limited to the lesser cost of the repair or the deductible. Irrespective of either scenario applying to a tower, if our MGA, our brokerage, does the extra pre-underwriting, pre-screening work and examines the acts and regulations for a building, the bylaws, then we can more accurately price and rate that tower. And we can also take proactive actions, education, and risk management initiatives with the condo corporation and the unit owners that we insure. This will ensure sustainable profitability. An 11th overall marketplace item involves the total number or sheer volume of claims that are being filed. This has risen significantly in the past 5 years. So not just the absolute dollar amount, the sheer volume of claims. This has a cascading problem, is that in larger multiple unit buildings, when a water issue or a fire issue arises, it's generally speaking affecting multiple units in the tower, not just the one where the action was initiated. And feeding into this is a continued escalation in building costs or repair costs for claims damages sustained. This is a continuing trend where we see the replacement cost or the rebuilding cost for a building increase year after year. In this context, anything that condo corporations as well as individual unit owners can do to reduce their risks and prevent claims is going to be helpful when measured over the long term. Hence the need for our firm, for the MGA, to be responsibly proactive with consumers, which is something that both the distribution brokerage and the MGAs typically fail at doing. A 13th marketplace item that we're seeing play in the background in condo insurance is that we're seeing the global reinsurance costs rising, and that in turn is having a knock-on effect with the condo insurance pricing. Just beyond that is a 14th item, which is also in the background, but there's some general capital issues with carriers, and that is leading to problems with the insuring of the condo market, which has seen an explosion of towers being built in Canada, fueled by heavy immigration numbers and societal trends where people are migrating into urban centers. The increases in demand for condo coverage is significant with the explosion in tower construction. And this sets up the 15th marketplace item, which is as a result of all of these things, consumers and governments are upset. The consumer is turning negatively on the brokerage channel as a result of dynamics at play that the channel does not fully have control over. Add to this a passive brokerage channel, which has a tendency to take the easy way out. In this case, that means not making an effort to educate insureds in risk mitigation and prevention. Instead, brokerages are taking their transactional commission money without working for it. If the brokerage, and if Agile, the MGA, wants this product to be profitable in this condo segment, then neither party gets a free pass. A 16th marketplace item is that even lower risk condo towers are expected to see premium increases in the coming years in the 25% range. That's huge. Higher risk condos are going to see even worse increases in premium. And there's a 17th item in the marketplace that does need to be mentioned, even though it's not the politically correct thing to do. But there are, to a degree, some ethnocultural issues at play in the claims problems. But government and industry refuse to raise these publicly, instead deferring to political correctness. But what we do see is in major urban centers such as Toronto, the immigrants post-2000 are coming from new, diverse source countries, and with them comes different living habits, even an unfamiliarity with insurance concepts and concepts around insurance. So for many of these populations, insurance is treated as a bank account to draw down on at each and every opportunity. And that is factoring into negative loss ratios. An 18th marketplace item is just the high demand for condo insurance coverages. It's increasing in rates irrespective of claims performance, and part of that's just simply greater demand is leading to increases in pricing. And a 19th marketplace item, which I've touched on a little bit already, is condo owners not being able to make their mortgage payments due to fire, climate, or weather losses, and assessments to pay off their condo corporation deductibles and subsequent increases in their own unit insurance costs and increases in deductibles. Such people are being displaced from their homes. They have to pay their condo mortgage plus temporary rent at hotels or apartments, and quite often they cannot afford this. Or they lose their third-party renter after the fire loss and now have to make a payment on their mortgage on their own with the absence of rental income on that unit. The 20th marketplace item is escalating condo insurance premiums are threatening condo resale prices, which is not making consumers happy. Item number 21. 5 years ago, severe weather insurance payments in Canada was $400 million. Today, that figure exceeds $2 billion. Item number 22, higher condo fees usually means lower condo resale values. Higher insurance premiums means lower resale values. Rather than face higher condo fees, condo unit owner associations are allowing building repairs and regularly scheduled maintenance to fall behind, and that in turn is feeding into rising insurance claims. Another marketplace item, number 24, is that in terms of condominium corporation insurance, there's a very real risk of some condo corps going bankrupt due to rapidly increasing insurance costs, repair costs, and maintenance costs. And around all of this is some marketplace item number 25, and you see this often in Toronto, but condo fees are rising higher than incomes. And this is another stress factor in the marketplace, but it's actually also resulting in worsening claims activity. Marketplace item number 26, even new buildings less than 5 years old with no claims are seeing massive increases in deductibles and annual premiums to the condo corporation, and this is directly impacting the unit owner condo insurance because the condo corp insists that the unit owners cover any gaps in their own insurance program. Marketplace item number 27, construction replacement costs have doubled and tripled over the past 5 years. Thus, when claims do occur, the costs are increasing year after year. In marketplace number 28, the last one I'm going to mention, and that concerns the majority of personal lines condo insurance consumers in Canada. Numerous surveys have been done by different organizations and associations, and they all are consistent in one thing. They point to how a personal lines condo insurance consumer does not know what their personal condo insurance policy covers, especially in how it relates to the condo corporation policy. So if there's gaps, people just don't understand what the insurance program is. And this willful ignorance in the insurance market has led to a bad rap for the insurance industry, which is just the laziness of the consumer, but it has added to the distress in the marketplace overall. There are a handful of solutions to the distress in the insurance market for condos that are being mentioned publicly, and let's highlight those. The first one is that some are saying that there should be a cap on insurance premiums for condos. Second is that there needs to be government regulation of the condo insurance sector. Third is that the insurance industry itself, organizations like Insurance Bureau of Canada, are saying that it's important that risk management strategies should be pursued. But those very same insurance organizations, like IBC, are not offering any specifics on what the risk management strategy should be for a condo unit owner. Number 4, the insurance industry is saying that consumer education is key. Brokerage, IBAC, Insurance Brokers Association of Canada said this, Insurance Brokers Association of Ontario said this, but they're not offering any specifics for the consumer. Fifth is that there are some practical maintenance things that can be done to address and reduce the water claims issue, maintenance in the condos. So people are mentioning that in news media, but nothing's actually being done about it. There are many issues and areas of concern, and some of them we already touched upon in the marketplace overview section. But let's add a few more into those. There's climate change and extreme weather events, which have been mentioned, which are contributing directly to personal lines condominium claims problems. But then we also have to consider the height of the tower. There's so many new tall towers in the country. We tend to have more claims, payouts in those towers. The vacancy rates and the renters are two issues. Renters tend to have more claims than unit owners who are living in their own unit. And where you tend to have more vacancies in a building, or a larger percentage of them, there tend to be more losses in that building. Of course, there's the rising condo fees. There's the maintenance and repair programs, both for the condo corp as well as the individual unit owners, having those maintained and up to date. The quality of the condominium board governance is obviously an ongoing concern, and that directly ties back into the maintenance and repair programs. There's the hard market conditions we're facing in the insurance industry. Something that's a concern of consumers, the lack of overland water coverage. So having that extended water coverage would be a nice selling item for our product. And then claims arising out of hydro capacity. So the inadequacies of some of the municipal infrastructure that is built that feeds into condominium towers, hydro and water in particular, they're not adequate, and they're leading to insurance losses in the buildings. And of course, there's the increases we're seeing on renewal in this space in rate, deductible, and the cost to repair. So now let's dive into some of the claims issues that are common where we see high frequency in Canada. Obviously, the number one overarching concern are claims arising from water damage on the property side. In terms of liability coverages, there's nothing really standing out in terms of patterns or frequency within the provincial Ontario market or the Canadian market that are driving rate in any particular direction. As far as water damage claims, there's a variety of things that are playing a role in that. Part of it is flooding from neighboring units. Wall pipes are bursting. We have things like high-tech plumbing, which are really contributing to that. That's very cheap plumbing. And we have some condos where newly built ones, they're only a year or two old, and then they have a bunch of wall pipes bursting, and then they realize it's this high-tech plumbing, so they're actually tearing down sections of the wall to replace the plumbing of the entire building, and they're only a year or two old. Another area is balcony door damage and window damage. Sometimes the window damage is just the seals tend to age with time, and then water seeping in from rain and moisture on the outside. We're seeing runaway living expenses. For instance, when we had the wildfires in Alberta a handful of years ago, you had people who, to this day, it's 2, 3, 4 years later, have not been able to return to their condominium. So the living expenses of some of the policies on the personal line side are just increasing. That's pressuring carrier results. One thing that became apparent is that the taller the building, the worse the water damage problems are. The more the units, the bigger the building, clearly there's a negative cascading effect on the water damage claims issue. So our opportunity here is to use differentiated rating and charge significantly lower prices for mid-size and low-rise towers. Since higher towers are where we find worsening water damage from accidental overflowing sinks and tubs, overflowing toilets that are plugged or burst pipes, or even water supply line failures, our solution to this, our opportunity, could be to attach a much higher deductible as an incentive to the consumer for claims arising from negligent accidental tub, tap, sink overflow. This could help to encourage better behavior by the tenant or condo unit occupant who is insured. If you look at Toronto, there's water supply line issues that arise from certain builders that cut corners in their construction techniques. They rush construction. They're less experienced in the condo development market, since some of them have migrated over from custom home construction or are smaller builders lacking the expertise and experience required for building a condo tower. And there's even some foreign builders, especially coming in from the United States, which are entering the development condo market, but they have less invested in their community reputation. So this all affects the quality of construction and even times the quality of the materials used to construct a tower, which is all contributing to higher personal lines condo claims. As an insurer, pseudo-insurer, Agile acting as one, as the MGA in designing this product, they can identify these particular negligent builders, and we can charge a much higher rate or levy higher deductibles for buildings built by these poor reputation developers or poor developers, or we just choose to blacklist them and not insure any units in those buildings. Two examples would be, one developer would be Liberty, another would be Concord or Concord Pacific. In the Concord Pacific, for example, they built a lot of the leaky condo towers in Vancouver, British Columbia, about a quarter century ago, and also near Skydome in Toronto, or now Rogers Centre. A lot of those towers immediately west of Skydome were built by Concord, and there's been significant issues where they did not, because they built the municipal infrastructure feeding into them, not the city didn't do that, that they have not built enough water supply and hydro supply to feed the density of condo towers they built there. So what happens is every year you're seeing where certain condo towers, and they're high-rise ones just west of Skydome, they lose power, and they don't lose it for 2 hours. They lose it for days on end. They can't air condition. They have little built windows that they can't open, so that people just are suffocating inside from the heat and the lack of air circulating. And this is all due to faulty construction. When we consider the probability of water-related losses in complexes, especially ones with truly large numbers of people residing in that tower, so really ones that exceed 35 stories in height, it's almost ensuring that water losses are going to occur, especially ones with significant costs. I mean, the math is undeniable. One leaking dishwasher easily causes $700,000 or $800,000 in claims losses, and that in turn can be passed on to individual unit owners through a one-time assessment in order to recover the condo corp deductible expense. Or in other cases, where the individual condo unit owner who controls the residence where the source of that water originated, that they have to pay the deductibles for all the other condo unit owners affected by the water leakage. And related to water damage, one thing that has been discovered is that towers, especially taller towers, where we find a large number of renters as opposed to actual unit owners living in the condo, you tend to find more claims involving water damage and even certain other loss categories. Bottom line is that we must charge higher rates for renters of condos than we do for owner occupants. Also, in a neighborhood like that, Skydom is that you have higher foreign ownership, you have the higher turnover, but you also have higher vacancy rates. There's some floors in those buildings where they'll have 16 units, but only 2 or 3 of them are occupied. The rest sit vacant year after year. So that Skydome neighborhood I keep referencing is a perfect example where we need to pre-underwrite, pre-screen a given neighborhood, and the neighborhood will inform the rate. No different than auto insurance by postal code. And finally, I've already alluded to this numerous times without saying it starkly, but consumer behavior is a common source of claims. At the end of the day, that is something that we can't control, but we must try to influence. And the behavior of consumers, insureds, becomes apparent because they leave taps on just through the carelessness and negligence. They leave windows open, they leave the balconies doors open, they forget that they have a barbecue on the balcony and then a fire starts. But all we can do is try and influence that and not control it. And that's why the risk management customer education program is so important. There are 2 keys to success and profitability that stand above others. One key is differentiated rating. The technology platform is critical to enabling this. Dollar store tech means we cannot be nuanced sufficiently in how we rate and price risk exposures that are causing the poor loss ratios. The second key is proactive risk management on the part of the distributing brokerages, as well as Agile, the MGA. Agile is the de facto carrier in playing the role that a carrier would normally play. Thus, it does not get a free pass of only creating the product and then sitting back passively. Agile must play an assertive, creative role in managing risk to ensure profitability in the condo insurance segment. I thought it would be helpful to develop and flesh out what a profitable residential condo insurance purchaser looks like. So what is a superior target client profile? It's these criteria. We focus on clients living in small and medium height towers, towers with a higher proportion of owner-occupied units, ensuring owner-occupied units as opposed to renters, units with water tanks less than 10 years in age. Units with that have installed water sensor leak technology, especially with the water supply shutoff mechanism. Units with smart home devices, because these are connected to Internet of Things appliances. Towers with up-to-date maintenance and repair and service records. Towers with capable associations and board governance. Towers that have a lower tenant turnover percentage. Towers that have a low unit vacancy rate percentage. Towers built by a developer with a good reputation. Towers that do not have crane toilets or other brands that are known to be deficient. Clients who have purchased or residential unit owner who's bundled other insurance products from us. Those correspond with a lower loss ratio. Clients who do not purchase auto insurance, if they buy the condo insurance from us and bundle that with auto, then that's going to increase the loss ratio on the condo insurance. Buildings where only licensed reputable trades are used for unit repairs, this should actually be written into the bylaws, and that should also be the case for the common areas of the condo court. where there's no barbecue on the balcony, so this should be written into the bylaws, they should be banned outright. And then towers in neighborhoods with good urban planning that are not overly dense in the sense that urban infrastructure has not kept pace with the condominium density. There are a number of actions that engender underwriting profitability. So in the next few slides, let's flesh out and mention some of those. We want to encourage the use or the adoption of technology. So this really focuses on three key areas. One is the installation of water leak sensors, especially the ones that have the capability for shutting down the water supply when a leak is detected. The second would be the installation of smart home devices. And the third would be the consumer using the digital inspection process that we have, which would mean using the GOCANVAS app as well as the Google Cloud Vision AI app. A second area of engendering profitability involves tower pre-screening and pre-underwriting. This is the most important, crucial thing, and this involves cooperation between the distribution brokerage as well as the MGA, in this case Agile. So that focuses on about a dozen different, 10 or 12 different items for the pre-screening. So we want to monitor and review the Condo Corp maintenance repair records to ensure that they reflect up-to-date execution. We want to review the turnover rate in a given tower. Higher turnover results in a rate surcharge and a deductible increase. We also want to review the vacancy rate in a given tower. Higher vacancy results in a rate surcharge and a deductible increase. We want to review the foreign ownership in a given tower. Higher foreign ownership, higher rate. We want to review the condo bylaws and, if needed, request changes prior to insuring units in that building. We want to ensure that only licensed trades are permitted for repair and maintenance. We want to ensure that barbecues are banned. We want to have taller towers. Well, taller towers means higher rates, higher deductibles. Developer reputation. Let's blacklist poor developers. Or if we are still going to insure units in a poor quality developer, we better levy substantially higher deductibles and significantly higher rates. And lastly, we want to review the Condo Corporation insurance policy to understand how that impacts the personal lines consumer. And there are some additional miscellaneous actions that can be taken to ensure underwriting profit. There's about 6 things we can mention. One is we want to encourage the bundling of insurance purchases, since this correlates with lower loss ratios for the condo insurance. Another is that we want to reward the replacement of water tanks that are older than 10 years with a lower rate and a lower deductible. We want to charge a higher rate and charge a higher deductible for tanks older than 10 years, or perhaps we actually just blacklist that type of unit. We want to prepare education program on risk mitigation and loss prevention for both the customer and the Condo Corporation Board. We also want to check if the tower is using Kitech plumbing or crane toilets or braided water piping, because we know that these things result in water damage claims. We also want to review the quality of construction materials used for a given building. Now, this ties directly to the particular developer and that developer reputation, and this could be part of our pre-screening of towers. And lastly, we want to only accept risks that are subject to unit inspections being carried out by the insured customer. Such inspections must be repeated every 3 years. Our loss prevention program needs to be progressive, assertive, and creative. We need to set a new groundbreaking standard for the marketplace. It requires close, consistent oversight of the condominium corporations and their boards and their associations, as well as close oversight of the insured unit owners. A multi-party approach is required, which entails specific roles of oversight and duties assigned to the MGA, the distribution brokerage, the condo corporation, and the insured unit owner. The MGA has a number of proactive things that it needs to do to ensure underwriting profitability. Among those, let's highlight some of them. The first was obvious. It's to create a loss prevention program, the related materials and the training sessions, and even the videos, which would be used by parties to engage them, such as the Condo Corporation itself and its board, such as actively engaging the insured unit owner. Ideally, these videos and materials would be multilingual and accessible for disabled persons. A second crucial item is pre-screening and pre-underwriting of towers and even neighborhoods. For instance, the MGA should monitor the condominium corporation maintenance and repair programs and ensuring those are up to date. Where we find that they are up to date, then those would have the best rates and the best deductible programs. But if we find buildings where they are not, we'll have to make a decision. We either blacklist that building, or we still insure individual units in the building, but we will levy higher deductibles and surcharge the rates. A third key item for the MGA is to monitor the turnover of tenants and the turnover of ownership of units within a given tower. A higher turnover means more claims. That means we should punish those towers with higher rates, levy higher deductibles, perhaps even offer reduced coverage scope, or we just don't sell in certain enhanced coverage exposures for extra premiums. A higher percentage of rates of ownership of owner-occupied units in towers means fewer claims. So we should reward those with lower rates, lower deductibles, broader coverages. Fourth item for the MGA is to monitor the vacancy rate for units in towers. Where we find too many vacancies, then we perhaps charge higher rates, levy higher deductibles, restrict coverages, stop insuring units in the building altogether, or we non-renew units in that building. And as part of setting up this program, or condo insurance product, the MGA has some other responsibilities in terms of establishing and securing some relationships with third-party vendors and technology suppliers. This is for things like smart home devices, water sensors, water tank replacement vendors, toilet vendors, and also offering automated visual inspections, such as using GOCANVAS or Google Vision AI. And another item is that we need the MGA to review and check the Condo Corporation building policy. So we pre-underwrite each building in each neighborhood before we load that data into the database to sell insurance units for that building. So the Condo Corp, we need to understand how a given policy interacts with the personal lines. And are there any bylaws that might have to be changed or recommendations put forward by the MGA to a given condo board at a certain tower to change certain bylaws, such as banning barbecues? Obviously, the distribution brokerage has a fundamental key role in playing to ensure underwriting profitability. As such, there are a number of things that the distribution brokerage must undertake. The first of these would be monitoring the Condo Corporation maintenance and repair programs and ensuring that those are up to date. This could be part of the pre-screening and pre-underwriting a given tower, and that information can be exchanged back and forth between the MGA. Obviously, if there's a lack of compliance with the maintenance and repair program, that is a red flag, and we may decide to blacklist that building entirely. Or if we still want to proceed and insure units in that building, obviously, we're going to have to levy a higher deductible and surcharge the rates. A second item is that we want to ensure that the distribution broker is having the insured condo owner conducting an inspection at inception when the risk is initially bound, and then every 3 years thereafter. These inspections would not be 30 minutes in length and all-encompassing. They would only address a handful of key issues where we know there are claims frequencies in condos in Canada, such as things related to water damage. These unit owner inspections would be conducted using 2 apps which are easily downloaded to their phones and can be then erased after that. The first app would be GoCanvas. The second app would be the Google Cloud Vision AI. The Google Cloud Vision AI is simply, you have it on your phone, you walk through your condo premises. While you're doing that, the camera on the phone is scanning the entire premises, labeling and detecting every object in it. The GoCanvas app is simply taking a traditional paper checklist like inspectors used in the 1970s and digitizing it on their phone. So the checklist will cause the unit owner to go to the 4 or 5 key areas we want them to check, where we know there are high frequency claims, usually pertaining to water damage, and just have them check that item. And it's all done in real time on the phone. Then on the GoCanvas app, the person does the electronic signature, is automatically uploaded to the brokerage, to the MGA, and to the consumer themselves, so they have a permanent record. And the GoCanvas app and the Google AI, by the way, have the longitude and latitude locations. So we know that the person's not claiming they're in South Beach, Miami, when the condo is actually in downtown Toronto, and they're saying that they're inspecting it, and they really aren't. We know where they are when they're doing the inspections. It's important that the distribution broker, but also the MGA, stay on top of the water tanks. Once we have an inspection done, if we discover that the water tank is 10 years old or older, that's a red flag, because we know that once a tank is older than 10 years, the loss frequency increases exponentially every year thereafter. It's a money-losing proposition. So we want that water tank replaced in order to stay on risk. So if they do not replace the water tank, then the MGA is going to have to levy a higher deductible, substantially higher, something in the $5,000 range or $10,000 range, and surcharge the rate. But if we want to have the person rewarded for replacing the water tank after 10 years, so we can discount the rate by 10%, 5%, whatever the decision is made. We also need the distribution brokerage to actively engage the condo corporation and the board. And this is presenting the loss prevention and risk mitigation materials, training the condo board, and then having them propagate that information to all of the tenants in a given tower. And obviously we do need, for the distribution brokerage, to digitally engage the consumer. So this can be done despite the low commission involved, but because it's being done digitally, it's not like it's requiring effort. We can have all these things pre-programmed prior to our risk being bound. The Condominium Corporation Board and Association play a fundamentally key role in risk mitigation and loss prevention. That goes without saying. There are many things we need them to do, and a lot of it is just simply promoting greater awareness among tenants. But there will be occasions when we approach or as part of our pre-screening of a given tower or property manager controlling a bunch of towers, that the MGA, in cooperation with the distribution brokerage, we may advise a condominium to change or amend certain bylaws that we notice are amiss. We also must make sure that the condominium corporation is providing us with the regular maintenance and repair program schedules so we can see that there's no slippage in the execution of those. And we need those condo boards obviously to promote things like installation of water sensors, especially the ones with the auto shutdown mechanisms as part of those. Perhaps they could pass a bylaw that compels that installation of those water sensors. We also need cooperation of the condominium corporation in terms of the water tank age in the different units, because once there's that 10-year mark, which becomes a concern for us after the 10 years older. We also need them to promote and enforce the annual, like having the annual inspections done. So even though we only require inspection and inception of binding first year and then every 3 years thereafter, it would be good if the condo corporations compelled through some bylaw to have an annual inspection done in certain areas, especially involving water damage. And we need to double check that the condo corporation in its rules and regulations and bylaws are compelling satisfactory unit owner minimum insurance requirements. And the last thing that the condo corp could do on our behalf is promote the loss prevention to the condo unit owners and the tenants using the prevention materials that we've developed, and they can provide those to them. And that can be digitally through their tenant website. Now we get to the insured unit owner and their role in loss prevention and risk mitigation. There are several things that are key for them to do. First of all would be inspections using our apps. Second thing would be replacing water tanks once they age out at the 10-year mark. Third thing would be installing water sensors, especially the ones that automatically shut down the water supply if a leak is detected. Fourth thing would be replace the crane toilets. That's a faulty brand. That's the result of a lot of water leak problems in condos. The number 5 thing would be installing smart home devices and software, because there's a correlation between if you have a smart home device in your condo, the loss ratio is lower. At the end of the day, the presence of IoT, Internet of Things, does mean a lower loss ratio. Google Cloud Vision AI is really quite an exciting service that we can use to conduct annual inspections by our customers. So what is it and what does it do? Well, simply put, it's a cloud-based service software which does image recognition, object detection, and it categorizes the content that it views. So it's classifying these images, and with every object that it detects, it even provides measurements of those. And it's a machine learning, artificial intelligence informed software. So what are the benefits for the customer, but also Agile, the MGA, and the distribution brokerage? Well, there's a number of things that come to mind. So some of these benefits of the Google Vision AI are we can monitor the cleanliness and the orderliness of the condo unit. We can monitor insurance to value. It reduces, obviously, our inspection expense because it's replacing human inspectors. And the first 1,000 uses of Google AI, so the first 1,000 customers every single month that use Google AI on behalf of our firm are free. There's no cost to our firm. It ensures more accurate inspections are carried out. It complements the annual inspection checklist questionnaire, which is what we use GOCANVAS for. The Google AI creates a visual recording of the premises, which helps us with claim settlement process, and it reduces the friction with customers if a claim does occur. It also helps us understand the images and derive insights from those. The customer can upload images and photos to us, and we can run those through the Google Cloud-based software program, which gives us additional analysis ability. And obviously, it modernizes the inspection process and puts it in a low-cost environment for our firm. And we're better able to spot defects in the premises condition and even the contents. Some of the accrued insurance customer benefits for using Google Vision AI include the fact that it can be used on any device, smartphone or tablet brand. It is very, very easy to use. It is quick. The insured just downloads the app. They walk through the condo premises, and then the phone does the work. It labels, maps, and detects the contents for us, and it ensures greater accuracy that the customer's insuring to value. And this results in a more fair and perhaps better claims settlement process with less friction for the customer. What is GoCanvas? It's a subscription service that allows our business and our product to replace expensive, inefficient paper forms, such as an insurance application or inspection form, replace it with an app on a smartphone and a tablet. GoCanvas is fluid as we actually build our own app. I've actually already built our inspection form. It took me less than 6 or 7 minutes. GoCanvas is fully customizable by our firm, so we can change it yearly, annually, depending on what inputs we want. And it also incorporates functionality with things such as GPS, image capture, dispatch, barcode scanning, electronic signatures, push notifications, and access to other business data that we load. At the end of the day, the reason why we want to embrace GoCanvas is that it is the method of conducting annual inspections on the condo units. This means that we eliminate paper inspections. The inspection checklist will take less than 5 minutes by the consumer. We automate the paperwork, we digitize the paperwork, it uploads to our firm in real time. It automatically sends a PDF version of the inspection to the insured unit owner. It's got a full drag and drop mobile platform. We can integrate the data that we receive with our other software platforms seamlessly. It works on all major mobile devices. It works also both online and offline. That's a key convenience. And the beauty is that in a matter of a few minutes, we can custom tailor or write our own custom template inspection checklist. And that's situated on a mobile app, which is what the customer end user will use to complete. One fantastic feature of GoCanvas is that the inspection app records the precise address location that the inspection is taking place in. Another beautiful feature is that the app enables the consumer to take real-time photos as they do their walkthrough checklist of the premises. We can ensure that we get a complete inspection report from the customer, It's got the electronic signature feature built into the app so that we can verify who completed the inspection. So we're obtaining improved data for better underwriting and less friction in the claim settlement process. And the inspection form is easy to use, even for a novice customer. There are many possible options we can offer to consumers to cross-sell and bundle other insurance products online alongside their condominium insurance policy. In doing so, we contribute to lowering the loss ratio of the condo insurance policy experience. It is in our best interest as underwriters to pursue this strategy. It should also be expected to result in a more stable set of carrier subscription partners over the course of time. So let's consider a handful of benefits that I think are obvious for offering online insurance bundle options. We've already established that there is a direct correlation between selling a bundled insurance policy product alongside the condo unit owner policy, because we know that results in a lower loss ratio. Thus, as underwriters, and the distribution broker too, we're clearly incentivized to cross-sell insurance products online during the condo insurance process in order to achieve higher levels of profitability. Number 2 benefit, if we offer auto insurance as a bundle option, the industry experience suggests that the condo unit owner policy will actually experience a worse loss ratio, thus lowering our underwriting profitability. So we want to avoid bundling with auto. A third option is that third benefit is that we improve client retention. A fourth would be that we build a larger fence around the client. 5 is that we're more likely to engender loyalty with the consumer. 6, we create a more memorable purchase experience. And 7, we're extending our brand. And lastly, number 8, we already have the client's attention online while they're purchasing their condo insurance policy. So why would we not do the obvious and offer them additional product options? Our firm needs to have a data strategy. In doing so, we are then empowered to analyze the consumer online, their behavioral data, which currently as a firm we're not doing, but we must be doing. Because by having a data strategy and employing and executing that data strategy, we actually increase our profitability. So it's foolish not to pursue this. So it's not really necessary to go through an extensive list of mentioning different product options we can bundle, but a lot of them are obvious. Critical illness, life insurance related things, health insurance, pet insurance is a really good one, in-home warranty insurance, travel insurance products, and on and on and on. The list is endless. Well, that's the end. I thank you for your attention as we ran through the residential condominium marketplace. And there's no more live presentation or Q&A. On another day and time, I'm free to answer questions. Thanks.